Hey guys, what's going on? It is December 20th. I just wanted to go ahead and give you guys a recap for the day. I had a trade set up that was A+++. Saw it coming, took a trade a little bit before, and then took that trade in another account. And I unfortunately missed a huge sell-off that I anticipated. And how did I anticipate? Well, I can recap that in a minute, but let's get into it. All right, so I'm on replay within my TradingView account, and I just want to kind of show you kind of how the day went. So we'll just go ahead and kind of play through this. This level here was the New York Open, and you have the day open, which is obviously, for me, I live in the Mountain Time. And let's just pause it here because this is a really important point for me. So the day open tends to be a level that I have automatically put onto my screens within TradingView through a free script. And you can obviously reach out to me and I can share that one with you. But really what you're seeing here so far is a bullish open, right? You have the New York Open. And if we look back, just kind of like glancing back, you know, this range from the London kill zone, according to ICT, is quite large and quite a sell-off. So you would kind of anticipate us to be able to go in and potentially kind of erase that move. Additionally, I have a weekly fair value gap low here that we didn't even touch, right? That's a bullish thing. So if we're getting into a bearish fair value gap, we're moving higher and we're not kind of coming back down to it. If I just kind of scroll out, just like if you look at when we first kind of hit this level here back on Monday, we blast through it, sell off at the end of the day right through it, kind of work our way, and then we're above it. But look at this in the New York hour. This is where I went long the other day. You have us kind of open and we come down, we touch it and we just take off. And then we kind of respected the VWAP, which is the volume weighted average price. But that's not the point of this video. But really, you know, I kind of took my first trades. I was bullish and I thought, okay, we'll come up. We should. I kind of took a trade in here. So one thing I notice a lot of is these, you know, pop up. It's sell off. And if I feel in a couple minutes that we're not going to continue the sell off, we're going to kind of go and try to reach this high. And you can see here, you know, if you were to kind of get in on one of these three candles, you've got a nice 5-point move and higher depending on how you trade. If I'm trading in my funded accounts, I'm trying to scalp because these are just day trades. I can't hold positions long term. But basically, I have a play, you know, we make a move into the day open, which again is when the contract actually opens for the day, not New York Open and everything else. You got to be cognizant of all these different actual levels that some of these algorithms would put into their strategies, right? Like we can kind of get into it, but you know, as I'm going through it, what happened here was at 8:04, so 34 minutes into the day, we have the first volume imbalance where this next candle opened a full tick higher. So you kind of see what I think personally is that anyone who sets up an algorithm, for the most part, has to include time. And so when I see these blips, like, hey, you know, kind of like next minute, and maybe some of my bots also are like, hey, we're in. To me, that kind of indicates like a buy program. So when you see that volume imbalance, really for me, it's a matter of, okay, there was some unique buying right at that tick, right as it launched. And you don't, just because like if you look throughout this day, if we look at this entire thing, there's no volume imbalance until we get here. And I marked that on mine. And you see we immediately go away from it, come back, and pretty much to the tick, touch it. So that would have been a long and target the true day opening, which is midnight time, New York. And that again goes to the fact that, again, the day opening happens when the contract opens. The true day open is at midnight. And then you obviously have New York open, you have London open, and Asia open. Those are all things you should be kind of cognizant of. And look, like we come down, we touch this volume imbalance, and we shoot up. So within 3 minutes, you could have had a really nice trade. But really, so what? Nothing really goes on here. You know, I mentioned volume imbalance and we'll short below this level. But, you know, for me, it's support until otherwise. So we're just going to kind of continue this on at about a 3x speed. And you can see... we don't show this, but really, I have this level, fortunately for me, as kind of like, you know, I kind of want to start to get short. And the nice thing about trying to capture the top, it's a really retail move, rookie move, if you will. The reason being is like most retail traders try to catch the top and the bottom of a move. I'm calling the bottom, I'm calling the top. But for me, it was a good risk reward. So I had a nice trade here, and it left this... bearish fair value gap, and I just want to play it out a couple more minutes. You can see we immediately go down into a bullish fair value gap, and there was no trade here yet for me until this exact moment. So I'm glad I paused it here. And really, let's go a couple more candles, but this is what the short for me was. You go in and you kind of clean out that the fair value gap, or really the lack of trading, right? So the algo goes up to that level and then sells off. So I'm really probably 1 minute behind this move because I like to have that candle formed and make sure that kind of get confirmation. Am I late? Probably. Could I try to be quicker? Probably. But for me, you know, it's really simple. Like I am just trying to make money in these funded accounts at scale quickly. So what does that mean? So let's just go back at it. So here I have shorted when the market failed to climb above the bearish fair value gap. Perfect retest and then the continuation sell-off. And really, you know, you could argue, I'm just going to fast forward this a bit. Like look at how you have this sell-off and then you have one more touch. So really like there's a number of opportunities to get short here. And for me, somebody who's only really trying to capture 5 points, I wanted to go and kind of what would be a logical level that, you know, if there was a sell-off or if there was just a healthy pullback, right? Because any market that just goes straight up has to have retracement. There has to be people that are in the market that are taking profits. Bottom line. They're not it's not like new sellers and all this and that. There's people taking profits. If you were long since the open and all of a sudden you start to see some sell-off, that, you know, that can kind of tell you, hey, you know, maybe you had putting your stop right here, or maybe you had your stop down here. And logically for me, I notated this, and I showed you guys, you know, that this was the trade I had, and I was targeting the true day open. And we'll just kind of, I'm just curious now, look, you can see how quickly, you know, right? You're not getting any momentum back to the upside. And there it is. A few minutes later, within 10 minutes, that was my trade. Straightforward using ICT concepts that you have a fair value gap. You have a bearish fair value gap that is, you know, according to ICT would be called an inversion fair value gap because it goes in and then it inverts it. And so for me, I was done for the day. I ended up going skiing and missed an absolute sell-off. So I just want to fast forward to the sell-off and why I think if I was in front of the computer, I might have been lucky enough to, at the very least, capture some of this absolute sell-off. So we come out of the silver bullet hour. And again, if you notice, I said I would short below this level, okay? So we get close to the level. And this is really interesting because I want to kind of pause this for a sec. I just want to take this and draw it out a little further because I want you guys... Let's see. Good. I can do that. Okay. Let's just put that out there. We've got the day open, and let's just continue this. This is live replay within TradingView. And the fair value gaps and all these ICT things are automatic for me. Now, look, I told you I would short if the market holds below. But look, this is also an area where there was substantial buying, and boom, it finally comes back down to this level, and look at that response. So again, it's one of those things, guys. Strong support, if broken, should become strong resistance. And so you see the obvious rebound there. And I think a lot of people would be saying, okay, this is a realistic break, test. And let's just kind of see what happens. So we move, a little failure to get to that high. Boom, we make that high. But now we're entering kind of that lunch macro. And again, we have not taken out the morning session high yet. So anybody who's long is thinking, hey, maybe this trending day is losing some steam. Continuing on. Still haven't gotten above it. And when I see these really small fair value gaps, I'm just going to kind of zoom it into like each line you see on the chart being 1 point, which is something I would do if I was trading a session that was, the range was smaller. This kind of allows you to kind of see there is enough movement to make money. But whenever I see a small fair value gap and then it quickly retested and rejected, that to me is like, hey, light bulb, get ready to monitor for shorts, okay? That's just how I kind of use these concepts to my advantage. So I'm just going to kind of zoom it out because if you're watching this, it's a replay, right? So hindsight's 2020, but I want you to watch these levels, right? I would go short below this level if it holds. So let's just keep going. Again, respecting that level, it takes it out, kind of starts creating it. And look, it takes it out. And I think, algorithmically, you still have a fair value gap. You still have this liquidity level that wasn't worked. And now all of a sudden you're starting to see some sell-off from here without getting that new high. So, we've cleared out any stops here. But everyone that has their stop above here, if they're short, they're looking good. So let's continue this on. And we can kind of notice soon we'll start to see the sell-off. Now look, again, I'm just carrying this out because I want to show you guys that like these algorithms always know where the price is. But look, first of all, the day open. Where's a logical spot where you should get response at these logical levels that are marked out on all kinds of traders' levels? We get a nice little quick bounce off of that level. If you're trying to get 5 points, you've gotten 5 points just playing a bounce above. Your stop would have been fine with little to no heat. But now we have the break, okay? So this is where I would start to say, when can I add a new short? I want to see us now give me confirmation that was once support is now resistance. And why is it that way? Because you have all these people that probably had stops there, or let's say if they were long, let's say, you're going to want to kind of get back to even. Let's say if you were short here, right, and it rips up and all of a sudden you get back to that level. Now you're selling because you've gotten all that concern out. But here we go a little bit further and boom. If you look right here, you have a perfect retest of that volume imbalance. And let's see this. Now, if I was here during the day, I would probably, if I had multiple units, I would try to take a piece off at the New York Open, maybe the 630 Open, but ultimately targeting the weekly fair value gap low, which is also a 4-hour fair value gap high, or it was. So we can see right here, that is major selling. So really, if you don't see us kind of maintain that level, you can say it's, good to be short. And as you can see, we kind of come up to the mid-level of this fair value gap and the sell-off begins. I would have had pieces off here. Really, this short is one that you really want to just get short and ride it. But I want to give you levels of what I would be looking for and where I would be considering if I had been in front of the computer to make these trades. And we can see the sell-off just rips. Here's this level again. Ultimate target, I would have been happy. That would have been, for me, nearly a 100-point move, which is way more than I would ever want in a common trade for me. And we're going to kind of just zoom this out a little bit. And I want to show you just how quickly things can change. So we'll just play this out and boom, you have massive selling. And this is always that like, oh, you know, if you're watching this on a minute by minute basis, for me, this is kind of as I become more astute, this is people taking profits in my opinion. And with that, I would be looking to actually be adding shorts on this move up. The more advanced you get in trading, now we're going to see each of these lines. Now we can see we've touched the week open. So another target. We have a weekly fair value gap high. So you would expect some sort of bounce here. So again, we still have about an hour left in trading. And anyone that knows, if moves like this happen, and this appears to be a pure liquidation break, if moves like this happen, you need to just chill out and know that a lot of people are going to be probably just capturing the profits at the end of the day. So there's not going to probably be much more of a move into the final hour. Here we hit that fair value gap. Boom, we get immediate response. Immediate response. Look at this, guys. I have this marked off on my calendar, so I would expect a fair value gap high to provide some sort of resistance. And you also have this weekly open. So we go above the weekly open, retest that exact level and go higher for, 50-point move, really. So, there's nothing to sneeze at. If I'm looking at these lines on a 5-point basis, again, I probably would have already been out of my shorts and I would have maybe taken this. I mean, this is a beautiful bounce, but I just want to zoom out and let's just show you guys how the rest of the day went. But look at how we're hanging out right by this fair value gap high. And you have kind of a good strong sell-off into the close because there's probably people who are long. And really, you're just going to see some sort of continuation. Tomorrow, I'm just going to jump to the full screen so you guys can see me a little easier. Tomorrow is one of those days that because we've had stair stepper, we have 2 more trading days this week. Think about it logically. Like if you're able to hold overnight and the market's just been stair stepping up and now we've flushed down, we would anticipate continuation tomorrow and maybe a flat Friday. Or tomorrow's Friday, right? Like there's really, you can trend up, you can trend down, or you can consolidate. And now really this move has kind of just become a consolidation. Let's just kind of pull it up on the hourly. It's going to look wild. I already know that. And look at this, you have this move from last week and it's just like, here we go. We've just wiped out all of this amount. Now look at all my notes. Like that's, when you're trading on a day-to-day basis, like small moves is all you need to capture. So you'll see. But again, on the hourly, we're kind of coming back here. The market has opened, but it's all about being able to just stick to your goals, stick to your levels. I'm just looking over here. Let's just pull this back over. Now that we've come into this weekly fair value gap, it looks like we might have kind of tested these lows. But this was pretty drastic. And if there wasn't any news or it was just a pure liquidation play, at the end of the day, in my opinion, really since the CPI print, the last one we had on the 12th, or was it? Yeah, we had it on the 12th. At the end of the day, we should be retracing some of that. Like this is a Santa Claus rally if I've ever seen one. And now you have people taking profits and anyone who hasn't sold, which most of the institutions have already sold their main levels for the end of the year, the hedge funds, the mutual funds, they pretty much cleared out. If you're tax loss harvesting now, you probably want to get it done. I want to show one chart that to me told me the market was done going up 3 days ago. So I'm just going to bring this over. And the chart's Apple. So why Apple? Well, I can tell you because personally, you guys can't even see it here. Apple. Now, First, I want to give you a history lesson. Looking at some of the previous tops that have happened in this one, you can see there's always like an inside day after a major rip. I'm just going to kind of shrink this down so we can kind of look at it. Maybe not as clean here, but again, inside day before a sell-off. And here now we're probably going back further than we need to. Another intermediate high, and then you have this balancing. So for me, just from my experience back in 2022 and have known that I got burned, I was long from down here all the way up to here, and I anticipated us going up to some of these new highs, and I got stuck, which is not good. But really, for me, we have this, again, these inside days kind of we're telling. Here you have this little move and then another, basically inside day. So kind of looking at this last week, this is one of my top holdings, so I'm always closely monitoring this stock. And it moves the market drastically. So back here on Thursday is when I called my top. I sold a bunch of 200 covered calls on all of my positions in the long portfolio for Apple. For me, if I was going to get taken out at 200 by the end of this week or by the end of last week when I made the first trade, because I trade the weekly options, I was fine with it. Like, I just felt like the steam was out. Everything just kind of felt overbought. But really, I mentioned this before, when this little fair value gap stayed open Tuesday, so that would have been yesterday, that was kind of like, hey, I really want to be maintaining my covered position or considering a short. And really, like, you see this strong move, I really wouldn't want to touch Apple or add position or start a position in Apple. There's just logical levels that we should test first. We seem to have some good bounces around the mid 180s. I don't know. I love this stock. I still think it's a double. But with this little hidden fair value gap hiding there, and you see the respect, we opened lower, went higher, but never closed the bar ahead. To me, that's a really strong indicator of what I see in markets and how I use other markets while I'm trading during the day and while I'm swing trading or my long-term positions, is I use all the information I can, disseminate, and figure out what actually matters. And this was a good sell-off. And so, I just want to thank you. It's a little probably drawn out. Hopefully you could listen to it at 2x. But leave me a comment and a like if you enjoyed this so I can get back to giving you guys more videos. I've just found that when I was doing more videos more frequently, I had a little bit more of an appetite for risk because I wanted to be right for you guys. And so by kind of taking a step back and just focusing on my risk tolerance, focusing on what I'm trying to do, I know that at the end of the day, that's what's important for my family and I. Because I trade full time for a living. I need to make money. If I don't make money, we've got problems. And so, for me, it's just that simple. And so, I am a day trader at heart now. I trade NASDAQ futures. Am I open to trading all kinds of stuff? Absolutely. But I like to just kind of focus on a tight circle. I had a nice short in Amazon today, but I didn't leave it on long enough, obviously. After this flush, it probably would have been 100% plus. That's fine. Green is green. I'm wearing a green shirt, so today was a green day for me. And really, like, going into the holiday, I'm not expecting much. At the end of the day, now is not the time for crazy moves. We saw that if you were in front of the computer in the afternoon, you could have had a fantastic trade. But these prop firms that are telling you, you don't need any time to pass, be careful because it's all about risk management. And if you can't manage risk, when you get a funded account, you're going to do the things that got you there. And that has been told by owners of any kind of prop firm or anyone that's a successful trader. Maintain your risk, cut losers quick, try to hold on to winners, and at the end of the day, play your ranges. Like today was a good range. So could it be increased volatility into the weekend? Sure, but it's a holiday. People are going to start taking vacation. Tomorrow's like the best day to travel if you're traveling for it. But be safe, be smart. Thanks for watching. Give me a thumbs up, give me a like, give me a comment, ask a question, and I'll try to keep these things going for you. Other than that, until next time, you guys take care.